Walmart reported their third quarter earnings November 16th. While they reported a net profit and good same-store sales, the share price tanked nearly 10%. The media was saying it was due to the bond market and others blamed the dangers of deflation, but we believe it was simply because the shares were correcting after reaching their all-time high, a pattern that has been seen again and again since 2015. Walmart's market capitalization currently sits at $420 billion. Turning to the financials, revenue was up almost $161 billion, better by 5% from the comparable quarter last year. Gross margin improved slightly to 24.6%. Operating income was $6.2 billion, much improved by 130% year over year. Pre-tax income was also better at $950 million. Walmart had a pre-tax loss of $1.4 billion in the comparable quarter last year. Net income was $453 million, a lot better than the $1.8 billion they lost last year. As we mentioned, comparable stores data was good. Walmart US improved by 4.4% to $109.4 billion. Transactions increased by 3.4% and the average ticket size grew by 1.5%. Sam's Club same-store sales were up 2.8% to $22 billion. Transactions grew by 4%, though the average ticket price was slightly lower at negative 0.2%. Walmart's international business grew by 10% to $28 billion. Market value ratios showed positive results. Shares outstanding decreased slightly by 8 million nominally, helping ratio valuations. EPS came in at 17 cents, up from last year's loss of 66 cents. Sales per share improved 5% to $59.50. Cash per share was $4.50, up 5.2%. Walmart's book value was $31.66, better by 7.1%. We annualized the PE ratio with the current quarter's earnings to get 230 times. Not exactly a reasonable multiple, however. The PE growth rate was negative 1.85. The leverage ratios didn't change much year over year. The debt ratio is 0.14 and debt to equity is 0.42. The company added $2.4 billion in long-term debt to the balance sheet. Interest coverage ratio stands at 11.55, up on a much stronger operating profit. Walmart's liquidity ratios have a mixed performance. The current ratio is 0.85. Walmart's accounts payable increased by almost $4 billion and short-term borrowings grew by $2.8 billion. The quick ratio at 0.2, which doesn't include inventories, and the cash ratio as 0.12 are reasonable and better than Target's liquidity ratios. See our previous report. Return on assets annualized at 0.7% is rather poor, and so is the return on equity at just 2% annualized. Though much improved over last year, Walmart has an equity multiplier of 3.03, relying on debt to run the business. Walmart reported 9 months ended. With regard to their cash flow statement, these metrics showed operating cash flow at $19 billion, up 21%. Investing outflows were up to $15.4 billion, largely as a result of larger payments made to property, plant, and equipment. Investing cash flows were only down to $179 million. The company only bought back $1.28 billion of its shares, while they bought more than $8.7 billion in the 9-month period last year. Free cash flow stood at $12.3 billion. Walmart didn't pay a dividend, and their enterprise value of Walmart stands at a multiple of 10.46 and a 34.21 multiple with respect to cash flow. Lastly, Walmart's guidance for the fourth quarter is that it expects a comparable sales in a wide range around a mid-single-digit decline and GAAP and adjusted EPS of $1.90 to $2.60. Rather broad in our opinion. We'll see how consumers hit the shops on Black Friday and the Christmas period.